Let me ask you something personal. Do you have a 401k, a pension, a retirement account, any kind of savings that you're counting on for the future? If you do, if there's something you need to know right now, that money might already be inside the car. AI bubble, not because you chose to put it there, not because anyone asked you, but because the financial system quietly moved it there through pension funds, index funds, and more private credit markets that most people have never heard of. OpenAI lost $21 billion last year. Not 21 million, 21 billion. In 1 year, Google just raised $85 billion by selling stock. SpaceX is about to go public in what could be the largest IPO in history. And the money that's going to buy all of this, a significant portion of it is coming from ordinary people's retirement savings. In this video, I'm going to show you exactly how that happened and what you can do about it. Let's start with the numbers, because the scale of what's happening is almost impossible to believe. OpenAI, the company behind ChatGPT, the most talked about AI product in history, spent $34 billion last year to make $13 billion. They lost $21 billion in the 1 year, and they plan to burn over $850 billion by $850 billion at the same time. Google is raising $85 billion. SpaceX wants $75 billion from public investors. Anthropic, the company that makes Claude, has already raised $65 billion privately and is preparing to go public. Add it all together, and you're looking at somewhere between $300 and $400 billion of AI-related stock that needs to be sold to the public in the coming weeks. This presents a unique opportunity. Next 12 to 24 months. That is an enormous amount of money that has to come from somewhere. The question is, where? Here's where it gets personal. After the 2008 financial crisis, interest rates dropped to nearly zero. And that created a problem for pension and retirement accounts, because their whole job is to grow your money safely over time. When safe investments stopped paying decent returns, pension managers had to find something else. They turned to what's called private credit, essentially private loans made to companies outside of them. The normal banking system, private credit, is now a massive, largely unregulated industry, and it is deeply invested in AI data centers. Think about that chain for a moment. Your pension money flows into a credit fund. This fund then provides the resources necessary to build sophisticated AI data infrastructure. Those data centers rent their computing power to companies like OpenAI and Anthropic, companies that are currently losing billions of dollars every year. If those AI companies can't pay their bills, and right now they can't, that ripples back through the entire chain, back to the data centers, back to the private credit funds, back to your pension. This is not a hypothetical. This is the structure that currently exists. Now, why did Google suddenly decide to raise $85 billion by selling stock? Google is one of the most profitable companies in the history of the world. They make tens of billions of dollars in profit every year. They don't need money. But here's what Google understands that most retail investors don't. The window might be closing, Right now, investors are excited about AI. They're willing to pay high prices for anything AI related. Google knows this, and Google wants to raise as much capital as possible while that excitement still exists. There's another, and I want to be careful here, because I'm not saying a collapse is certain. I don't understand. There are factors at play that require a deep analytical perspective. What the downside looks like, because very few people are talking about it honestly. Accounts for $300 billion of Oracle's projected future revenue, a quarter of $1 trillion of Microsoft's projected revenue, $138 billion of Amazon's if you OpenAI runs out of money, or if investors stop funding it, those revenue projections disappear. Which means Oracle, Microsoft, and Amazon all take massive hits at the same time, which means NVIDIA, whose chips power all of this, loses its biggest justification for its current valuation, which means every AI-related stock in your index fund drops together at the same. And if the private credit funds that are financing AI data centers start to crack, the pension funds and retirement accounts that invested in those private credit funds take your big losses too. This is what interconnected financial risk looks like. And most people have no gut. They're exposed to it. So what do you actually do with this information? First, check your retirement account. Look at where it's actually invested. If it's in broad index funds, you already have meaningful exposure to AI stocks, whether you wanted it or not. That's not necessarily wrong, but you should know it's there. Second, think seriously about genuine diversification, not just across different stocks, but across different asset classes that don't move together. When tech sentiment turns negative, this is one of the core reasons why a growing number of investors are looking at crypto not as a get-rich-quick trade, but as you see, genuine diversification matters. Crypto doesn't move in lockstep with AI stocks. When tech sentiment crashes, crypto holds steady. The key is having a framework, a systematic way to think about building a well-balanced investment portfolio for long-term growth, about which crypto assets to hold, how much, and when to adjust, without a framework. It's just speculation. I've linked 2 resources in the description below that I think are worth your time. The first is Intelligent Cryptocurrency VIP, a structured system for navigating crypto, who want to learn how to manage and invest their wealth confidently and with expert guidance. Want to understand how to build a portfolio that survives market cycles? Both links are in the description below. No pressure at all, but do take a look to see if this fits where you are on your journey. In the next video in this series, I'm going to look at OpenAI's actual financial statements and show you exactly why losing $21 billion a year is such a dangerous problem for the entire economy, not because OpenAI is evil, but because of how deeply connected it is to everything else. Subscribe and hit the bell so you don't miss it. I'll see you in the next one.